All right, good morning, everyone. I'm Bill Montgomery, and I am a co-chair of this year's EMI and Corning case competition and in a Cornell Johnson MBA class of 23. This year's case was certainly complex and sophisticated as it challenged teams to consider options to aid an Indonesian telecommunications company in addressing stagnating growth. In a world of 5G rollout and global reliance on data networks, this wasn't a small feat. Despite the unique challenges associated with this case, teams were undeterred. This year's competition included over 80 registrants from more than 25 schools around the world. The first round entries were graded on a variety of criteria, including clarity, creativity and innovation, reasoning, and presentation quality. We were truly impressed with these submissions and it was not an easy task selecting the top 5 finalists. Thank you to everyone for your hard work and a truly wonderful ideas. We now welcome our first team, Hoosier Hypothesis from Indiana University.
A very good morning, and thank you for giving us the opportunity to present our solution. We are team Hoosier Hypothesis, and it would be great if you can get the clicker for the presentation. It doesn't.
The one switch is not working, the previous.
Okay. Is it okay if we restart? Yes. Sure. Okay. Thank you. So a very good morning, and thank you for giving us the opportunity to present our solution. We are team Hoosier Hypothesis, and we are here to reposition Indonesia Tel as the leaders in Indonesia's telecom market. I am Bhargava Mangalgiri, and I'll be talking about the current situation and the outcomes of our turnaround strategy.
Hi, I'm Deepthi Singh, and I'll be walking you through the pricing and cost analysis.
I'm Sanjay Sukumar, and I'll be talking about the technology aspect of our recommendation and the implementation timeline.
Hi, I'm Akansha Mansharamani, and I help with the detailed technology implementation solution.
Hi, I'm Mukesh Raj. I'm the implementation and deployment specialist.
In the next 10 minutes, we are going to start our discussion by grounding it in Indonesia's current situation and how our 3-step turnaround strategy is going to reverse the trend of the last 4 years. Then we are going to dive deeper into the strategy and unpack its components. And finally, we are going to wrap up our discussion by talking about the program management, implementation timeline, and the importance of managing risks. The graph on the left side here represents Indonesia Tel's financials across 3 time periods: 2017 actuals, 2021 actuals, and our projections for 2025. This model is grounded in data from the case file and our research and analysis of reports from reputed sources like Statista, Gartner, and Deloitte. In the last 4 years, Indonesia Tel has seen a negative CAGR of 3.8%, losing 14% of the market share in the process. Across the same time period, its net income has gone down from 26% to 6%. In the next 4 years, looking forward, we are going to reignite growth through our turnaround strategy and help Indonesia Tel achieve a positive CAGR of 8%, recapturing 5% of the market share in the process. Across the same time period, through prudent cost reduction, we are going to help increase its net income from 6% to 29%. Apart from restoring growth and profitability, we are going to achieve 2 key business results. Firstly, we are going to reduce the debt to EBITDA ratio of Indonesia Tel to 2.4x, better aligning it with the industry standards and satisfying our investors. And finally, and most importantly, we are going to help Indonesia Tel create $2.1 billion of incremental market capital.
All right. Now that you have an understanding of what's at stake here, let me walk you through how we are planning to deliver these business and growth results. On our turnaround strategy is based on three key steps. First, we want to protect the current business that we have. Secondly, we want to expand on the products and services for our customers. And finally, we want to keep innovating so that we maintain leadership in the future. In order to defend and extend services, we are recommending a market-based price adjustment to bring up the revenue. And we are also planning on implementing prudent cost containment strategies to enhance the profitability. When we talk about industrializing products, improving services for our customers is at the center of our mind. We want to enhance the customer loyalty and customer stickiness by giving them a hassle-free app-based user interface. And we also want to leverage the voice LTE or the VoLTE technology to give them a better call quality. Finally, I'm sure we can all agree that Indonesia Tel must invest in its future. We plan to roll out 5G in the next 2 to 3 years by leveraging the Omnibus Law as planned. And simultaneously, we want to analyze our capabilities for 6G for when the time comes and engage with our customers to identify products and service offerings for the future. Diving deeper into the market-based price adjustment that we talked about, analysis based on the information provided in the case, when we saw the numbers for the telecom companies, we realized that our competitors are charging 3.1 Indonesian rupiah per MB of data, while Indonesia Tel, despite having the highest data traffic per customer, is only charging 2.01 Indonesian rupiah. This difference of 35% is unprecedented in a commodity-based market. So we recommend that Indonesia Tel immediately increase its prices by 20% to charge 2.43 Indonesian rupiah. This will not only give us a boost in our revenues without incurring any additional costs, but at the same time, it will allow us to maintain cost leadership in this market. How are we so confident that we can do this? As we saw in the case of Biocom, our competitors have been snatching away our customers and capturing market share despite them raising prices. We know that this market is not as price sensitive and the customers are willing to pay more if they have the right quality for the services they are using. Talking about the cost containment strategies, can we have the next one, please? Thank you so much. For this particular analysis, we have broken down the 2021 actual cost to serve into fixed and variable components from the highest to the lowest. And then through research and analysis, we have identified the industry benchmarks to reduce these particular cost segments. As you can see, we have taken a conservative estimate of only 3 to 7%, which if applied to the 2021 actuals would have reduced the cost to serve by 19 million on a base of 298 million. We believe that this cost containment, coupled with the growth prospects that we have from our technological solutions, will surely give Indonesia Tel the competitive advantage to sustain leadership in the future.
Now that we have seen the pricing and cost aspect of our strategy, let me explain how Indonesia Tel can make two crucial improvements with a nominal investment of $9 million. Now, before going ahead, quick show of hands, can you tell me how many of you have a prepaid contract with your existing service provider? Great. So if we are asked the same question in Indonesia, 97% of hands would have gone up. And this is the market dynamic we had in our mind when we came up with this recommendation that Indonesia Tel should invest $9 million in creating an app-based customer service and transition to a VoLTE-based 4G infrastructure. For the cost-conscious customer base in Indonesia, this app will provide one-stop solution for all their customer care and service requirement. It will empower them to monitor their usages real time and make adjustment as and when necessary. Now, for Indonesia Tel, on the other hand, this app will provide a constant stream of data regarding the constant changing customer preferences and an opportunity to roll out new services based on this data. Now, by analyzing these mountains of customer information, Indonesia Tel will be positioned to make insight-driven marketing investment. Now, to address the existing call quality and stability issues, the second part of our strategy is focused on how and when Indonesia Tel should transfer to a VoLTE-based 4G system. Now, these VoLTE-based systems are proven to have exceptional call quality, reduced call setup time, and then drastically reduced battery consumption. Now, what's the advantage for Indonesia Tel? We can easily transform by piggybacking on our existing extensive 4G infrastructure we have built over time and make this transfer seamless. Now, by creating this app and making other technology improvements, we'll be able to recapture market share and improve customer loyalty in the short term. Now, how does that help us in the long term? in the next 5 to 7 years, when the market is mature and ready to make a long-term commitment, will be best positioned to win in this new market dynamic. Now, let me change gears and show you how and when we will deliver this project. To achieve the results, we will implement 3 pillars of this strategy concurrently and monitor it throughout the process. The first order of business is to change the price, design the app, and roll it out in a phased manner. Next, we will analyze the segment-defining services like IoT, connected devices, and e-wallets, which will provide significant revenue stream for Indonesia Tel going ahead. Now, to make sure that all these subcomponents come together and deliver the final project, we will have a program management office monitoring the progress throughout the timeline. Now, this program management office has 4 critical components. We will make sure that we establish proper leadership and governance and maintain it throughout the timeline. And we will also make sure that the implementation teams use the project management fundamentals. Then we will make sure that we have established clear communication line with the stakeholder to make sure that we take their input and fine tune our approach on the ground based on that. And as the old saying goes, what gets measured gets done. We will make sure that we have set proper defined KPIs for our process and monitor it to make sure that we have achieved the desired benefits. Now, a strategy of this scale definitely brings with it some risks. We have spent a lot of time thinking about the potential risk, and you can see the top 5 list of risk and the associated mitigation strategies that can be applied.
Q&A. So, do you have any questions? Do we have any? So we're going to open up to Q&A. So welcome any questions from the audience.
Hello. Thank you, everyone. It was a great presentation. And my question is related with the price increase. You mentioned that you will increase maybe 30%, and well,
20%.
you have how much? Sorry,
20%.
20%. So I want to know which is the strategy actually to communicate that to your customers, because there is a risk of obviously lose them, and I want to know about that.
Yeah, that's an excellent question. That is something that we considered. So we have taken an approach where we identified, like we mentioned earlier, that Indonesia Tel is 35% below the average competitor. When we're talking about telecommunication services, it's a commodity-based market. So even if we are able to adjust our prices in a way that we're just below the competitors, and we are still going to be below the average competitor by 15%, we do not expect any customers to leave, because where will they go? We're still below the average competitor in a commodity-based market. And also, we would like to add that these improved quality services and the app-based solution that we are providing to the customers, it was mentioned in the case that these are problems that the customers are facing currently. So we are solving these issues at the same time. So we believe that these improved services are going to keep us in the market as market leader. Thank you.
Add just one perspective, to address how we are going to communicate it. We're going to make sure that we market it aggressively to make sure that the customers know what are the improvements that we are making parallelly to improve the customer service and the call quality issues that they're currently facing, so that they have an incentive to stay with us.
Great. Oh, we have a question.
Hello, congrats for your presentation. My question is related to improving service. It's not clear for me how are you going to improve that. I missed some more clear relationship strategy with the clients. The other issue is about the 5G health implications. I apologize for my ignorance. I never heard about that. Can you tell me more about that?
Thank you for the questions. So currently there has been claims that due to 5G radio waves, it has been impacting for the citizens who are living around the areas where these towers are. So these are just claims, but according to a recent research by Deloitte, these claims have been falsified, and there has been no impact on health of the citizens living around 5G towers or in general. So 5G is as safe as the current existing 4G, but it's all about the perception of how people perceive it. So we have a very well-defined program management step in how we are going to communicate the benefits of 5G and benefits of a solution to the customers and getting them onboarded with our turnaround strategy. I hope that answers that question, and we would like to add
Also,
more.
I just had a clarifying question. The first half of your question, where you touched upon, I didn't quite get it. Were you asking us how we plan on like delivering these services, or?
So we're at time, but really appreciate the questions and the answers, but great presentation. And next we have Team Dynamic Conquerors.
Can we start?
You should be able to share at any time.
Can everyone see the screen and am I audible?
Yep, you're all set.
Yeah, I guess we are ready to go. Yeah.
Hi everyone, we are Team Dynamic Conquerors from IIM Ahmedabad. The case that we're looking at revolves around Indonesia Tel, a telecom operator in Indonesia. It is currently experiencing a decline in both profits and customer base, while at the same time, it is facing an intense rivalry in the industry. To build a turnaround strategy for the firm, we will take a look at a few short-term as well as 4 long-term recommendations that the firm can undertake as we go through this presentation. We will also take a look at the key risks involved and the mitigation measures for the same. Indonesia's telecom industry is currently an opportunity of $11.1 billion that is expected to grow at 2.4% per annum over the next 5 years. The internet or mobile data segment makes up approximately 70% of this industry. The market is heavily penetrated with over 130 subscriptions per 100 inhabitants, which has led to other competitors exploring newer markets. The data services segment and the industry in general is majorly driven by the usage of social networking platforms, online content consumed by the residents, and the rollout and deployment of 5G networks. The major challenge faced by the players is low brand loyalty, which exists due to low switching costs and lack of differentiation in the product. The network services and suppliers are highly dependent on infrastructural presence, which is majorly concentrated in the western part of the country due to fragmented islands all over the place. Next slide, please.
So to understand the current state of Indonesia Tel, we have used a 3-pronged approach here. On the ambitions front, Indonesia Tel would like to move from being a 5G enabler to an end-to-end integrator, while sustaining market share, improving internet connectivity, and increasing profitability. Their existing revenue strategy, however, is highly concentrated on the Western region, while their cost of service is increasing year on year. Their action plan could be to capture opportunities like the scope of expansion in the Eastern Indonesia, trends of increasing internet and broadband penetration, and opportunities of trading spectrum rights for coverage expansion. Hence, they could expand coverage in the short run using NSA infrastructure and using the Palapa cable project in the long run. A shift to an asset-light model would help them focus on value-added services, thus enabling them to differentiate. Next slide, please. So we were able to come up with several recommendations laid out on the ease impact matrix, and we'll be going ahead with those highlighted in green. We believe that our recommendations will make Indonesia Tel more agile, while being resilient, improving margins, and becoming future ready. We narrowed down on these recommendations, keeping in mind the maturity levels, technological advancements, geographical landscape, diversification and expansion opportunities, and the financial viability. Next slide, please.
So now when we look at the short-term recommendations, Indonesia tells in the short term shall target on 2 things. One is to retain their current market share, and other one is quick entry to the market. For this, we are suggesting a lot of implements all throughout the value chain. First, looking at the spectrum, Indonesia Tel shall buy 700 megahertz band, which would be available in November 2022 to overcome the limitation with spectrum. Looking at the infrastructure and platforms, they should go into the market with NSA mode for quicker entry using their existing towers and 4G infrastructure. They shall also deploy open RAN and also RAN intelligent control with partnership with industry experts. Looking at the pricing model, they can offer innovative pricing models such as pay-per-use models, since the customers will only use high-speed data for particular period in time. And this can be done using a support of AI-based analytics to track customer behavior. Looking at the partnerships, they can also onboard OTT, gaming, as well as e-commerce players into their platform for providing better use cases for the customers. Looking at the long-term recommendation, the company shall follow a two-pronged approach wherein they build capabilities for the long run while remaining asset-light. How they can do this is that they can move on from a traditional approach of telecom companies which build, operate, and manage their own towers and other hardware setups to becoming an agile player that focuses on improving customer experience. This can be done by two methods. Their existing 4G capabilities with respect to their hardware and tower setup can be disinvested and rented out to raise cash for the building of 5G capabilities. And for 5G, they should go ahead with the operating lease model, which will be asset light. This will give us advantages in the terms of operational as well as financial front. We also propose an automatic robotic automatic process which will help us to reduce the cost in terms of the human resources. In terms of building capabilities, at present we will be going into the market with the NSA mode, which will be a quicker entry, but gradually we'll be moving towards the SA mode, which would help us to extract the full value out of 5G. We will also leverage other capabilities such as Satria-1 satellites that has been launched by the Indonesian government, as well as base trans receiver stations that has been launched by government of Indonesia. And these two facilities will help us to reach out to rural areas and offer them better 4G and 5G services.
Our next recommendation is to reorient ourselves to an end-to-end integrator. Through extended use cases, we can increase revenue and value proposition. As the income increases, we expect the demand for experiential services to rise as well. Moreover, bundling offers will also increase sales and market share. Based on a McKinsey survey, a potential ARPU of 9.5% is expected just from a selected few 5G cases. Apart from high potential use cases like cloud gaming and immersive in entertainment, there are several other products and services that could be offered, like faster internet speeds, video streaming, and so on. These can result in $1.3 billion revenue. However, a tier-wise rollout based on resource constraints, that is, infrastructure and human resources, is required, as it will help in a steady expansion. Another long-term recommendation is to establish strong B2B partnerships. B2B relationships are usually sticky, hence the revenue stream is guaranteed. Moreover, since B2B industry is generally connected, one successful contract can increase brand value and expand possibilities. Lastly, this also opens up the scope of B2B2C opportunities. Now, with increasing capital investments required for 5G, it is not just sufficient to be a connectivity player anymore, which has just less ROIC. If we move down the value chain, a higher ROIC can be established. For example, by moving all the way up to integrated services, Indonesia Tel can enjoy 20% ROIC. B2B partnerships show a positive outlook because high synergies exist. For example, OTT platforms can tie up with telecom companies to provide high-speed video downloads. Similarly, in gaming industry, smooth and immersive experiences, and in healthcare, better and fast diagnosis can be delivered. Therefore, B2B partnerships is a promising opportunity which Indonesia Tel should consider.
We now come to our final long-term recommendation. As of now, Indonesia Tel is providing its services mainly in the Western Indonesia. So we suggest an expansion into Eastern Indonesia by leveraging the newly developed infrastructure in the Palapa Ring project. So if you look on the right half, the Palapa project covers 4 major island groupings in the Eastern region. We suggest an initial rollout in these 4 regions with the NSA architecture for faster deployment. A basis for this recommendation is how Palapa project has helped reduce the gap between the West and the East Indonesia. Download speeds in the Eastern regions are now at par with the Western region. About 90% of East Indonesia has 4G services. Even the video experience is enhanced up to 36%. All of these are indicators of how it is the right time to undergo geographical expansion. Lastly, a simple calculation of the financial impact tells us that we can create an additional revenue of about $28 million if we can capture about 20% of the Eastern market. We also have analyzed 8 key threats in this industry that can enhance our challenges even further. So to assess the risk levels, we have multiplied the probability of risk occurring with the impact level that we perceive. On a scale of 1 to 16, we get the assessed risk, and 2 threats come out to be about 12 level threat. So first is the threat of satellite network, that is the Starlink, becoming publicly available, which can lead to a drop in market share. The second high level threat is of poor fiberization in tier 2 and tier 3 cities. This would surely result in difficulty to geographically expand our services. For both these threats, we suggest shifting our focus towards a satellite network, either by investing in our own network or utilizing existing government networks. Using satellite networks will not only allow for rural expansion, but also remove the dependence on fiberization. Finally, we also assess how effective these mitigation strategies are. Most of these are appropriate and fall in the green and yellow regions. But again, the most uncertain ones here are the satellite network-based mitigations, as the effectiveness highly depends on how well these networks can be placed.
The current slide shows the implementation timeline of our recommendations. We plan to implement our short-term strategies within the next 9 months, while the long-term recommendations will start bearing fruit over the next 3 years. After the deployment of our recommendations, we expect an increment of $288 million in revenue and EBITDA margins reverting back to the normal levels.
I'm sorry, guys, you are out of time for your presentation.
Are there any questions for our team?
Great, thank you for your presentation. You have excellent solutions. You focus a lot on the technical side. So I have a question for you because it seems to me, I may be wrong, feel free to correct me, that you focus a lot on the long run. However, it seems to me that the firm has a very big issue in terms of finding cash flows in the short run. They need cash and they need it now. Add to that the fact that they are highly leveraged. 70% is a debt ratio. So your solutions definitely can help in the long run, but I don't see how they can help in the short run. If in the long run the firm is dead, so what good can all this technical analysis do? So what are your suggestions for dealing with this situation that I just presented?
So you are asking about how they can bring in cash in the short run, right? To confirm your question.
Correct, yes.
Shivas, can you explain them about the value that we are generating through an asset-light model that we are building and explain it?
Sure. So basically, when we are going asset-light, what we are planning to do is we will sell off because of the omnibus law, we will be able to utilize more towers that are with the other players or the suppliers that are there in the market. So we can sell off our own towers and also not just sell off, but also lease out our own towers through which we can generate more cash flow in the short run. So the asset disposal by going asset light within asset disposal, we can see how by going 10% disposing of 10% of our asset as well as reducing 10% of our debt, we can generate a net income of $54 million, which is much higher than what we currently have as a net income. Similarly, like increasing the percentage of assets disposed, it will definitely lead to an increase in our cash flows.
That is a nice solution, not the best one, because what you're trying to do with this solution is that you deal with one of the biggest expenditures of the firm, which is the rent. However, this is not your only problem. Of course, selling your towers, that deals with depreciation because your biggest asset creates the biggest depreciation as well. But still, that's not the way you bring cash flows into the firm. For example, I would suggest something about advertising. Right, so making a bigger appeal to customers, which is what your competitors seem to do, or mergers and acquisitions, dealing with subsidiaries. So, but that is a good solution. Thank you.
Apart from the depreciation, sorry, I was just answering. Yeah, so apart from the depreciation, it will also reduce our interest payments even in the short run, since we are using the cash flows generated from asset disposal to repay our debt. over the next few months or over the years as we are disposing of our assets. So I feel that that would also reduce our interest flows and increase our cash flows.
Okay.
We have two speakers, two judges online that have questions. Amanda, you had your hand raised first. Could you unmute and ask your question, please?
Thank you. Thank you for your presentation. Very interesting. My question is about early on in the presentation, you mentioned a pay-as-you-go model. And then later you mentioned increasing customer loyalty. So I'm kind of wondering, most people who do a pay-as-you-go tend to be more price sensitive and have less customer loyalty. So how do you try to reconcile the two?
Yeah, I will take this one up. So what we were trying to say is that there is a fixed base package that will be offered. In addition to that, there will be specific periods in time where they would be requiring a high-speed service. So generally what telecom companies do is that they try to give a fixed package and for a high speed, but most of the customers won't be needing it for the entire duration of the day. So what we are doing is that we are identifying times in a day where they would be using high-speed data, and they can get a specific pack for that. For example, for 1 hour, they can pay extra to get that particular high speed pack. In the rest of the day, they can use a normal speed or a mediocre speed pack, which would be sufficient to deal with their other requirements. So what this does is that they don't need to subscribe for a very high value pack. So they will be getting the benefits of 5G as well as getting a affordable price range. So this will increase our revenue without losing market share. If we go for a very low price package, that will start a price war. If we hike the price of the entire base pack, that will result in us losing our entire customer base. So we are going with an innovative model of using this pay-per-use pack.
Thank you.
I think we're out of time. So the next team presenting is the Grote Warriors from McMaster University, Canada.
We can see your presentation. Please start.
All right, we'll start in 3, 2, 1. Good morning. We are the Groot Warriors from the Groot School of Business, McMaster University. My name is Nate, and together with Carolyn, Kamal, Shabam, and Vihan, our team will present on building Indonesiatel's turnaround strategy. Indonesiatel has been hailed as one of the top 4 telecom companies in Indonesia, and with the company's success, there are certain issues that arose, mainly the slow growth in sales, an increase in operational expenses, and the intensified competition with innovation. Considering all these issues, we recommend for Indonesiatel to take a 2-phase approach, with first expanding their connectivity in underserved regions of Indonesia, and eventually focusing on innovation by building Internet of Things or IoT capabilities. From these solutions, we have seen an opportunity for Indonesiatel to increase its market share by about 3% and reduce its operating expenses by about 2% in the short term, and to bolster innovation in the long term. From these solutions, both the company and ordinary Indonesians will benefit from this. I'd like to introduce you now to Mego, your friendly Indonesian neighbor. Mego is a student struggling with his online classes and connecting with his loved ones in other parts of the country. Mego also finds it difficult to stay updated with the latest news, especially with the unpredictable weather. And all of these are caused by his weak internet connection. So now the question is, how will our strategy improve the lives of ordinary Indonesians like Mego? Carolyn will now talk more about this.
Indonesia is a country that's experienced rapid growth in the past decade, with a GDP CAGR of 5%. And of particular note is the internet economy, which has seen significant growth. Indonesia's capital city will soon move from Jakarta to Nusantara, a smart city to be built in 2024. So with the growth of the internet economy and adoption of smart city models, we can expect that there will be a drive in the demand for IoT platforms in Indonesia. In the Indonesian telecom market, there are several important growth drivers at play. So firstly, telecom companies are thinking of the future, and they're expanding their integrated 5G offerings. Secondly, according to McKinsey, digitization will continue to improve the bottom line for telecom companies. And lastly, government legislation, specifically the Omnibus Law, will continue to drive innovation with great upside potential and minimal capital investment for companies, including Indonesiatel. So let's look at Indonesiatel in greater detail. Currently, they focus within the regions of Java and parts of Sumatra, but the competition has greater geographical reach. And so we believe that to be competitive in the market moving forward, Indonesia Tel should strategically expand to underserved regions of Indonesia. When we look at Indonesia's financial position, in 2017 to 2021, EBITDA fell from 50 to 43%. So to be competitive in this space, businesses must have high levels of innovation as well as low price points. So despite being low priced, Indonesia Tel has seen declining market share due to their lack of innovation. So we believe that Indonesia Tel should upgrade from being a low-priced telecom company to an innovative solutions provider. And now Vihan will walk us through our recommendation.
Let's focus on the short-term recommendation first, which builds on expanding telecom services within the underserved region within Indonesia, including Kalimantan, Maluku, Sulawesi, and others. Next, we aim to leverage the existing government schemes, including the Palapa Ring project, an infrastructure project that aims to provide access to 4G internet service across Indonesia, and the Omnibus Law, which allows telecom providers to use the existing network infrastructure. Hence, the 500,000 base shunt meter station within the same region can be capitalized. This in turn will reduce Indonesia Tel's operating expense, including rent, maintenance, and utilities. Initially, our goal is to build trust through the improved 4G services, and within the same region, then gradually transitioning into 5G. Now let's see how our friend Mego benefits from the recommendation. He is better equipped for his online classes and stays updated for the weather forecast. And due to the better 4G services, he feels connected with the loved ones across the country. Moving on to the long-term recommendation, through the groundbreaking innovation, we propose to bolster the position of Indonesia Tel in a competitive landscape by introducing end-to-end Internet of Things solution. For Indonesia Tel, besides the first mover advantage, other benefits of choosing IoT includes high margin in end-to-end products, the enormous data generation through 5G networks would feed directly into the IoT system, making the whole ecosystem stronger by the minute. And finally, providing an integrated solution to move up the value chain in telecom. IoT platforms within the private sector can be optimized to use business strategies through stronger connections, faster tracking, and predictive analytics. While within the public sector, IoT can deliver solutions for smart cities. As a key takeaway, with the highest data consumption among the telcos, Indonesia Tel is rightly positioned to build IoT capabilities and grow its market share in long term. Next, Shubham will talk more about IoT and its scope.
Here are some examples of smart city initiatives. By implementing IoT solution in traffic management system in Copenhagen, the green light of traffic was extended up to 30 seconds. In private sector, asset tracking is one of the most important use cases where LoRaWAN, low-range wide area network sensors, are used to track location, and these sensors do not require battery or GPS. Overall, these initiatives will impact Mego's life positively by building solutions in smart schooling, advanced weather forecast, and smart transport. We recommend Indonesia Tel to focus on connectivity, asset tracking, monitoring, and predictive analytics to build smart city solutions and target transport, logistics, and shipping industries in Indonesia. Moving on to financial outlook and projection, market research suggests global IoT telecom market is projected to grow with a CAGR of 37% in next decade. Government data suggests that Indonesia's IoT market is expected to reach $30 billion by 2022, with smart devices and government expenditure being the major components. Telecom companies like Telkom Indonesia and AT&T are allocating approximately 40% of capital expenditure budget to build IoT capabilities and observing a sizable revenue growth. Most telecom operators reported above 20% growth. Benchmarking annual revenue growth with similar rate, we project Indonesia Tel's revenue to touch $1.2 billion by 2025. Overall, in this competitive market, IoT integration will help Indonesia Tel to grow customer base and generate new revenue stream. Now, my colleague Komal will take us through risks of this plan.
One of the medium-level risks is delay in 5G rollout due to regulatory challenges. Since IoT platforms are compatible with 4G networks, Indonesia Tel can leverage existing infrastructure to start building IoT capabilities and then add more functionalities once 5G is rolled out. Second risk is the extreme climate conditions of Indonesia that can weaken connectivity. This is highly likely given Indonesia's geographic landscape, but this risk can be overcome with predictive analytics to detect the risk ahead of time and minimize it. And lastly, the threat of competition is a relatively higher risk to Indonesia Tel's expansion. However, Indonesia Tel's first mover advantage in IoT will facilitate their transition from being a low-cost player to an innovator in the country. Overall, the impact of this turnaround strategy is promising for all stakeholders involved. In the short term, Indonesia Tel will be able to leverage existing laws to expand 4G connectivity within 2 years and increase its market share by 3% while reducing its operating expenses by 2%. In the long term, with IoT rollout targeting major city projects in cities like Jakarta and key industries in the private sector that drive the country's economy, like the shipping and oil and gas companies, will ensure Indonesia Tel remains in the forefront of integrated tech innovation. And as for our friendly friend Mego, with reliable connectivity, continuous access, and real-time information, Mego will be able to reach his educational goals, be an active participant in the growing internet economy, and most importantly, will be inspired to contribute to the country's innovation.
As one of the promising markets in Asia, Indonesia Tel has a lot of potential, and digitization and innovation will be part of the country's successful economic journey. With our two-phase recommendation to expand to underserved regions and lead in innovation with IoT technology, Indonesia Tel will be better positioned to maximize revenue and become an industry leader. And now, together with the rest of Indonesians nationwide, Mego will be informed, connected, and empowered more than ever. Thank you, and we're now open for questions.
Great.
So excellent presentation. I have one very straightforward question for you. So what is the #1 strategy, if you may repeat please for us, that you suggest in order to decrease the operating expenses, just in one word? The #1 strategy to decrease the operating expenses, which was in your second, third slide, your goal. So what is this?
I can take that up. Thank you so much for the clarification question, first of all. And our primary approach to decrease the operational expense is to focus on the Omnibus Law and the Palapa Ring project. The idea is to use the existing 500,000 base transmitter servers so that we can cut down the cost on the major expenses, which were rent, maintenance, and utilities. If we see the operating expense over year on year for Indonesia Tel, these three specific rent expenses sums up to be 66.2% of the overall operating expense. And this would be our targeted cut down in terms of operational expense.
Great, thank you.
Lorena online.
Hello, thank you for the awesome presentation, guys. Could you please elaborate a little bit more on the costs and benefits of each one of these strategies? Because it seems like really great, but I'm not really sure about the costs. Thank you.
Sure. So thank you so much, Lorraine, for asking the question. What we can do is we can divide the answer into two approaches, focusing on the short term first and following up with the long-term finances. So specific to the short term, through the expansion in the underserved areas, our focus was to leverage two main aspects. Firstly, the population, and second, the current 4G network coverage using the BCG analysis data. So these points basically helped us to focus on top 5 provinces, which were the Nusa Tenggara, Papua, Maluku, Sulawesi, and Kalimantan. So a total population of these provinces summed up to be 39 million, while the internet penetration rate, as mentioned in the case, was 69%, which makes the targeted audience to almost 26.9 million. And at the same time, in terms of market share, our realistic claims is to gather the 11% of this audience. And this in turn would help Indonesia to reclaim the lost market share during the previous fiscal year. And while the Omnibus Law, as mentioned previously, we can save fees, including like radio frequency, rent, and maintenance. summing up to be 66.2% of the operational expenses, and overall would save us a total of 6.48 million. And overall, the net percentage would be 2.18% of the overall expenses. And for the long term, my colleague Shubham and Caroline can guide you further.
Thanks, Rehan. So on the long-term side, if you can see in the right of this slide, there are certain benchmarks that we have taken. So there are certain companies based out of China, Indonesia, as well as in Singapore. So these companies have generated approximately 20% revenue growth. So, and this is a public data available. And based on that, we have benchmarked our revenue projections to be around 20%. And so that comes out to be around 1.2 billion by 2025. In terms of how we're going to implement that, Nate, if you can go to appendix number 3. So there are appendix number 3, there are certain companies that we encourage Indonesia Tel to participate, to partner with, because there is a company called Tuya, which there is a real company, a real telecom company based out of Indonesia called Telecom. They have already partnered with Tuya and they are rolling out this IoT platform services. Along with that, there is also a company called Ericsson, which has provided this kind of services to more than 35 telecom companies across the world. And on the right-hand side of this slide, these are the some of these are some use cases that we encourage Indonesia Tel to focus on.
Thank you, guys.
I think we have time for one more question.
You have an online question too. David Wu online.
Hey guys, great presentation, very interesting. I understand from the presentation, I understand the long-term focus is to it's for smart cities and also IoT services, right? I'm just curious to see would these goals also be in some shape implemented into the underserved region eventually?
Certainly, I can take that one. So the initial idea is to expand into underserved regions. And as we can see in Indonesia, the government's focus is a lot on building smart cities and expanding the reach. And there are projects which are being funded by government to provide services to underserved region. And there are 100+ smart cities planned. So once we reach out to these underserved regions, definitely these kind of IoT services can be transferred to the underserved regions as well.
Okay, thank you.
Thank you so much.
Great. Thank you so much, Team the Growth Warriors. Next, we have Team Wizards from IIM Bangalore.
Share करूं?
You can start.
Sure, thank you. Going in 3, 2, 1. Greetings to everyone. This is Team Wizards from Indian Institute of Management, Bangalore, with the proposal of a turnaround strategy for Indonesia too. Now, I have been contemplating a visit to Bali in Indonesia for quite some time now, but one of the major reservations that I have when it comes to traveling abroad is telecom and internet connectivity. So naturally, an opportunity to study a telecom operator from Indonesia was of great personal interest to me. Our approach as a team, however, to this case was threefold. One was to study the business landscape at scale and the end user segments, including their demographics, behaviors, and expectations. 2, understand the problem landscape in depth and the pain points of the many stakeholders involved in the telco value chain. And 3 was to recommend solutions for short-term gains and long-term sustainable growth. Let's talk about the business first. While we typically associate telecom providers with infrastructure and network, telco business goes beyond just that and forays into customer centricity to build a 360-degree connectivity of sorts. Now, this could mean 2 things: accelerated adoption and increased retention. So a detailed understanding of the case, coupled with some primary research that we did with telecom users in Indonesia and exhaustive secondary research from sources such as EMIS, helped us understand the issues at hand for our company and also uncover a multitude of opportunities for us to potentially exploit. And we dumped these opportunities into 4 large buckets. 1, unincorporated Indonesia, with the goal of targeting the underserved, unorganized Indonesian market. As you can see, several areas to the south of the Sumatra Islands on the entirety of the east, including islands such as Sulawesi, they are at the bottom left corner of your screen, it's clear that there's a digital divide between the East and the West. So the case also talks about how there are 3,000 rural villages and 500,000 unused base transceiver stations. Now, this is a huge opportunity in waiting for us. 2, non-uniform mobile coverage, where we look at minimizing the geographical disparities between telecom service coverages. We analyze data from Ookla, a network intelligence service provider, to understand that 4G availability is pretty high in East Kalimantan, where surprisingly, all of our major competitors have set up shops, while we do not yet have a presence. 3, high interconnect usage charges, where we look to optimize our IUCs, which are at 7.1% today. Now, this has contributed massively to our increasing operating expenses. Furthermore, maintenance charges and utilities together account for 25% of the OpEx. And lastly, lack of digital payment systems, such as Unified Payment System or UPI, as it is widely known, which is being adopted at an exponential rate in India, another emerging market with similar user expectations. So naturally, the question is, how does Indonesia capitalize on these opportunities? So from reinventing the business models to achieving digital maturity through state-of-the-art technologies such as AI, ML, RPA, we recommend 5 solutions that we believe will help meet our targets of increasing the market share, reducing the OpEx, and increasing the annual revenue per user. Now let's jump into the recommendations.
Our first recommendation is about delayering the organization. We recommend separating the company into 2 functional units as network company, which deals with the infrastructure, and service company, which deals with the service business. We figured that the network company is the most familiar space to us, where the growth is long-term and low risk, but it requires heavy capital upfront. Whereas the service company, which is relatively newer space for us, would deal with the customer-facing activities. This would require relatively lower capital, but the risk would be higher here. There are multiple reasons why we recommend separating the functions. We can separate regulatory liabilities from each other. We would also have a better access to capital, since the risk appetite required for both the functions are different. In addition, the network company being a carrier neutral, it can share the passive infrastructure with the player, which would be highly suitable for 5G deployment, since the network sharing would be allow the player to bring down the total cost of ownership. Our second recommendation talks about the value creation with each of these business units to transformation. For network company, we recommend digitalizing the IT and network infrastructure. Now look, the switching cost for any consumer is very low when it comes to the telecom industry. So for the service unit, we must build superior customer experiences, and this can be done by taking proactive measures such as surveying the customer to grant predictive insights rather than just building descriptive insights based on the complaints. Now you also must have noticed in our balance sheet that the interconnect charges are more than 7%, which is very high. The best way to reduce this by transforming the way we handle the customers group. We recommend the company should create closed user group, what we call as CUG. It can be created in multiple ways. The company can have a look at the geographic locations or on the basis of the voice call data who they frequently talk to, the friends and family, etc. As the calls from CUGs would primarily be within the close circle of our own customers, the outgoing charges paid to the operators, the IUC, would reduce significantly. There would also be a predictable load on infrastructure, bringing down the maintenance costs as well. Our third recommendation is about growing business beyond infrastructure part of it. We believe that the company can diversify and exploit on three business fronts. The first is payment service through a single digital platform. Second, an ecosystem business, which is providing media services such as gaming and streaming. The third is a marketplace business, which is connecting the customer to the e-commerce sector. We believe that diversifying our offering will provide a greater digital and financial inclusion to the population. For that, we should start by launching an app for Indonesia Tel. We have visualized how our mobile app should look like. It should have option for payment, not just through wallet, but also through UPI, a unified payment interface where you won't incur any charges on peer-to-peer transactions. By doing this, we aim to bring financial inclusion of previously ignored population by 3 means. 1, through a payment gateway and UPI. 2, by partnering with market leaders whose services are frequently used by general public, such as Gojek and GrabFoods. And 3, by offering credit and BNPL services where you can partner with companies such as OVO and Credivo. That's about the payment service. On top of that, we should also try to bridge the gap, the digital divide through marketplace business by offering a common digital platform to e-commerce services. We've identified a few players here, such as Tokopedia, TanyHub, Lazada for a partnership. In a nutshell, this was our third recommendation for diversifying our offerings.
It is about including the vast unincorporated segment. Primarily, the aim would be to increase the postpaid customer base. Now, this can be done via incentives such as carry forward of the data, unlimited calls, etc. For Indonesia, this would translate into fixed recurring income and greater lock-in period of the consumers. The second strategy of digital inclusion would be primarily targeting the cost and value-conscious customers. First and foremost, Indonesia should offer superior customer experience by customizing data plans supplemented with value-added services. Relaxed payment terms such as EMI convertibility and BNPL in association with fintech firms should be offered. Finally, disaggregation of monthly data packs into daily data packs and allowing data carryover would increase consumption manifolds. Now, moving on to the final recommendation of reducing operating expenses, one major cost head of admin expense can be minimized by two means. First, by increasing the efficiency of the existing employees and by minimizing the human interaction. Now, for many of us, reaching to customer care is a big nightmare. The recurring consumer complaints like outgoing calls being barred could be resolved easily by a self-healing AI system. This would increase the customer delight and reduce the load on the call center. Further, Indonesia Tel should work on getting into Erlang as a service model, wherein it pays basis the network capacity usage and the bandwidth usage rather than the infrastructure erected. This would reduce the sunk cost and give it more agility to match the volatile network traffic. Providing consistent customer experience via an internal replicate or justify model would ensure company-wide best practices are adopted uniformly. As Indonesia Tel scales, we should shift to greener telecom networks to increase the penetration into isolated pockets. Now let's have a look into the implementation roadmap.
All right, now having outlined the recommendations, we try to gauge the risks and challenges in implementing the same. For instance, if you look at the third recommendation to diversify Indonesia Tel's core business, it could result in increased demand for capex and could shift the firm's focus. Now, in order to mitigate this, we should initially get into strategic alliances to leverage the core competency of the partnering firms. Lack of skilled expertise and non-alignment of the goals is as serious as our agnostic to most of the proposals that we have come up with. To evaluate this risk, we should implement an effective change management strategy succeed by upskilling, capability building, and attractive remuneration for the employees. Onto the implementation plan now, we should focus on reducing operating costs while implementing strategies for increasing revenue simultaneously for a faster turnaround. We should start with low-hanging fruits that promise quick wins, such as creating closed user groups and increasing the postpaid user base. Data customization, digitalization, and effective use of AI/ML would be subsequent steps. In the short run, the launch of UPI would be cherry on top of the cake, and the allied ecosystem business would help it climb to the next level. In the long run, though, the organization should be delayered into NetCo and ServCo to enhance new value creation. Now, we call this iterative cycle the Jive Loop, an agile framework of 4 transformation strategies, such as growing the complements, increasing the user base, building the organizational strength, and enhancing the efficiencies. Now, with this carefully built roadmap of the implementation plan, we project that Indonesia Tel should achieve about 30% operating margins in the next 5 years. With this, we'd like to conclude our presentation. Thank you.
Great, really appreciate the presentation. I'm actually going to kick off with the first question. So really thorough recommendations, lots of lines of effort. So I'm curious how you thought about the increase, say for, increase in marketing expense or other residual expenses to kick off some of your efforts or investment costs. And then secondary to that, how you think about financing, considering you're already a highly levered company.
Yeah, so I would like to go on to this. So when it comes to financing, so as such, we would be making strategic business alliances with the companies present there. First and foremost, on the shorter run, the aim would be to increase the postpaid user base and create customer user groups. This could be done with a minimum capex, as in we would be studying the data to come with closed user groups. So this would bring down the operating expenses as the calls would be made within the closed user group, reducing the the OpEx on other requirement for additional OpEx. Would somebody look to add on to this?
Yeah, on top of that, once we are reducing the OpEx there, our profitability is going to increase in the short term. And in further on, when we go on to long-term plans, such as, let's say, indulging ourselves into marketplace business, which would really require some sort of marketing there. By that time, we are hoping that we would have reached enough reserves with our companies to spend on such marketing efforts for our marketplace business or even any activities that we do after, let's say, 12 months or 24 months.
Great, appreciate it.
Thank you for the great suggestion. So I have a general question just to make sure that you have incorporated this, I think, important issue in your solution. So do you think that, and if yes, in what ways, had the government protectionism that was implemented for years and then its removal affected the competitiveness of this firm? And in what ways, of course?
Yeah, so in the case, it was very explicitly mentioned that the Billacom, which is a government-backed company, still has the government support. And Indonesia tells government sharing has come down. Now, this would essentially mean that the spectrum expenses would be on the higher end. But then what we can do is we can work on the value aspect. So keeping the cost on the same front, Indonesia Tel could offer greater value to the consumers, thereby commanding a market dominance. That would be the strategy forward for Indonesia Tel. Team, would you like to add on?
Yeah. So on top of that, with the omnibus law, we can see that, and we've also put this in our recommendation where we are saying that they should use infrastructure as a service model, and they should get into co-optation model where they would share the passive infrastructure with other players that are available. So that is, yes, there are difficulties with the government meddling in 5G deployment and government giving preference to their own company, their own state-owned company, Pilacom. However, there are other ways through which we can probably mitigate and try to get the best out of the situation that we have included in our as a infrastructure as a service model as well.
Great, thank you. All right, we have time for one last question.
Hi, great presentation. My question is, your short-term recommendation is to create the closed user groups and delayering the services, correct? So how do you think that this, this one recommendation of creating the CUGs will bring in more customers to Indonesia Tel, and how do you plan to differentiate yourself from the other market leaders?
Okay, let me go. Can we get to the implementation slide, team? No. Yeah, so yeah, and the next one. No, the final slide, yeah. So as you can see, we will be starting with creating the closed user group. But not only that, that would be the primary objective to reduce cost. But on increasing revenue front, we will be launching incentives to onboard more and more postpaid. Now, how postpaid adoption would increase is that first and foremost, they would be paying a fixed recurring revenue, no matter what they use. And the second is that it has been observed all across the globe that postpaid users have a higher average revenue per user. So that is what would be on the shorter run. But the primary motive of Indonesia Tel should be to launch the UPI, Unified Payment Service. So if you look into the geography, if you look into the market of Indonesia, there are over 40 million consumers who use e-wallets, but then they don't have some payment facilities for the lower marginalized section. So launching this UPI would onboard more and more people to the Indonesia Tel ecosystem. That is how we feel that though the revenue increase would be marginal, but then we would be getting more and more user base. That's how we plan to go ahead.
I'd like to add on top of that. So
Hey,
in our short term,
sorry to cut in. We're at time, but really appreciate your response. Great job, team. And lastly, we have Team Emerging 5 from Cornell University.
Hello. Okay. Thank you. That's going to fall.
So thank you. I'm representing Team Emerging 5, and my other teammates are joining us online. And so we're here to give our solution to Indonesia Tel's turnaround strategy. And for some context, we need to understand that the telecom market is generally becoming commoditized globally. This is a situation that is driving change across the industry. So Team Emerging 5, you have myself, Femi Olonua, Williams, and Shivani. And then they're all happy to be here, and we appreciate the opportunity. So if we look at the situation, it's important to note 4 things. That sales growth is slowing down. There's exceptionally high operational expense compared to the competitors. Indonesia Tel is struggling with innovation. And last but not the least, government is taking part or is meddling in 5G rollouts. Now, our strategy, we believe, can make Indonesia Tel the #1 Indo telecom operator, not just in Indonesia, but across the wider Asian telecom market as well. Our strategy focuses across 4 pillars that we believe will help Indonesia Tel achieve this. A merger with TriNet, the sale and leaseback of telecom tower assets, customer loyalty programs, and then innovation and partnership solutions. So you can see clearly here that when you refine the elements of the situation that we're faced with, it comes down to 3 core problems. There's a market share loss. There is the issue of profit margin decline. And last but not least, there's a lack of innovation in the system, which is showcasing in the business model. And at least 3 of our solutions take care of 2 of these problems. So we are driving an effective strategy to multifaceted strategy to ensure that all the issues are taken care of strategically. So I'll start with the merger with TriNet. So we believe this is the key to unlocking the possibilities for Indonesia Tel. And first question is, why TriNet? After the merger, the resulting entity would have a 40% leading market share. This gives Indonesia Tel, the final entity, the scale required to leverage economies of scale and also to reduce its cost significantly. And noticeably, it will be 5%, have a 5% market share over the next player, who is Bilecom at the moment. Secondly, TriNet has a significant percentage of its shareholdings in a corporate entity, which means that this merger can be done quickly, swiftly, and cleanly. And finally, TriNet is customer focused, and in a market that's becoming commoditized, having that customer-centric approach is key to winning in the business. So the impact, as we said, is that there'll be a wider coverage area for this merged entity, which means this is one of the levers that is used to generate value for telecoms. Secondly, cross-selling opportunities for TriNet's products that are currently gaining market share can be pushed across Indonesia Tel's current clientele. Now, the expertise in terms of dropping 10% expense is also critical for a company like Indonesia Tel, who is seeing low profit margins. So taking that management expertise and sharing it across the combined entity would lead to at least 4 million reduction in annual expenses. Investments in 5G will become more feasible, and then growth opportunities include leasing the base stations out, sale and leaseback of the base stations in currently unconnected areas. So that would help Indonesia Tel expand to areas in the east where there's currently no traction. And finally, we can negotiate, having a 40% market share, we can negotiate with the government to reduce that reduced frequency fee, which is 36% of the current expense, and help to fund other investments, especially notably 5G. I'll hand over to Femi to take over the next slide.
Thanks, Jindu. So the next strategy that Indonesia Tel should implement is the sale and leaseback of the tower infrastructure. So currently, Indonesia has a significant amount of its total assets invested in physical assets. About 72% of its total assets are physical assets. We believe that these will become redundant in the mid to near future. And so selling some of the assets now and utilizing the proceeds strategically would drive improved performance. So Indonesia Tel has a higher total debt to EBITDA ratio in comparison to some of its competitors. So it has about 6.2 times some of its comparable companies, which we believe is what's driving the interest expense. And so once it does the sale and lease back, it can use some of the cash flow or the freed up cash flow to mitigate this problem. So selling and leasing back the tower infrastructure can free up about $546 million in cash and also reduce the maintenance cost by about $6 million. So the freed up cash flow can be used by Indonesia Tel to settle its outstanding debt. So it has its outstanding debt of about $315 million and also reduce the financing cost of about $57 million. And then the rest of the excess cash can then be invested to earn interest income at a government rate of 7.3%. We are also aware that there's certain risks that are associated with this strategy, and so one of the significant ones being unstable lease payments. And so, in order to mitigate this, we would recommend that Indonesia Tel signs long-term contracts of about 20+ years with the tower companies. Next slide. Okay. The next strategy that we recommend for Indonesia Tel is implementing a customer loyalty program. So this will help drive customer engagement and experience and thereby improve its average revenue per unit. Implementing a gamified approach, so a gamified loyalty program, while also launching a one-stop shop app for its current clients will improve customer awareness and also drive brand loyalty. And these together will improve the experience for the current customers while also driving engagement for new customers as well. I'll pass it on to Will, who will go into our next strategy.
Thanks, Femi. So the innovations and partnerships that are going to drive this new business model are going to be new offerings, partnerships, and a few other opportunities. With the new offerings, we're looking at bundled offerings. That's just going to be offering convenience to the consumer to bring up the customer retention and by bringing up their cost of switching. It can be free, but if something's so convenient, you're less likely to do that. Data monetization is a big one. We're going to be able to have better targeting on our end, but we're also going to be able to provide that in various ways to other companies. Tiered pricing is another thing that we're going to be using to leverage the 5G that we do have until it becomes the predominant data. Expanding through Trinet's digital banking services and gaming offerings, it'll just be another thing that brings customers to our end, being it something that's not offered by competitors. For e-commerce partnerships, we're looking at partnering with third parties to complement our digital banking offerings, thinking like payments and ways to make your commitment to us more beneficial to you as a consumer. Other digital services could include something along the lines of subscription discounts, but in partnership with that subscription service to drive up their consumer count, kind of like how Verizon and Disney Plus partnered up to like fuel growth. Other opportunities is leveraging consumer data for improved marketing campaigns, as well as automation. Automation is just going to provide even more convenience to the customer by letting them be able to resolve their service issues or payment issues through something that's available 24/7, as opposed to having to get on a waiting line, and where person-to-person training can vary, and that leads to a positive or negative experience, and you want to mitigate that all you can. Next slide. So looking at the risks, one of the biggest risks is the government's view of how we're going to be using data. This goes back to the mid-2010s where the Cambridge Analytica scandal with Facebook happened. And then Indonesia came in and threatened to block Facebook entirely just due to the data concerns. They were even threatening to fine employees in Indonesia based on how data was used. To mitigate that, what we can do is we'll get with legal counsel just to see what we can do. Do we have to deaggregate identifying information within that data just to be able to use it to the max, but not get us in any sort of trouble? It's also one of the easiest to gain a benefit from, like the large data pool that we're going to have. So it's worth getting into this, but it does come with those risks. So you'll have to at the very least, get consent from consumers before data collection begins. Next slide. So in conclusion, we recommend merging with Trinet, divesting physical assets, rolling out customer loyalty programs, and providing more product selection.
All right, great, guys. You're at time, and we're now going to open up for questions.
Thank you. Very good presentation. So first question is, which type of merging you will perform with Trinet, and how did you value Trinet?
So based on the available data, we tried not to go too much outside the scope of the case. We're looking at Trinet as a company that has 18% of the market. We're looking at it as a company that earns about $500 million in revenue and a 25% profits, if I remember correctly. So those are the matrices we're using to judge such a company, which is why we went for a merger, not an acquisition. Because if you look at the market share and profitability of that company, it would be, transactionally speaking, you have a company that's owned 60% by a corporation. So you know the people in this that own this company, they in quote know what they're doing. A company that started in the 90s. So the proposal of a merger sounds better to a company like that because of the opportunities that come with it. Indonesia has 40% of the Asian market, which means there's 60% out there. And with the merger with Indonesia Tel, we'd have 40% of the Indonesian market, and that is a great launch pad to take forward into the larger Asian market where the profitability is higher. So there's more opportunity for both parties in that merger. So the valuation is just based on the market share and their current profitability as at today, based on the data in the case.
You have a question online from Lorena.
Okay, thank you guys for the presentation. You were talking about this merge with Trinet and also partnerships. Will you explain why would be interested for those companies to do the merge, to do the partnership? What is what you are bringing for them?
Okay, so for the merger, again, the merger creates opportunities, economies of scale, and the ability to launch not just in the Indonesian market, but to the wider Asian markets. And then Trinet is the next largest player in the Indonesian market, and that's the only merger that would allow Indonesia Tel to become the largest operator in the telecom industry. It's an industry that's becoming more commoditized. So scale and efficiency in operations are two things that will be critical to determining who wins in the space. And that the merger with Trinet grants that scale, and the management efficiency Trinet has garnered over the years also grants that efficiency in operations. Now for the partnerships, we're looking at partnering, say for example, the e-commerce partnerships. From what we see, the e-commerce space is at least 1.5 times larger than the entire telecom space as is. So the e-commerce space grants a lot of opportunities. So partnering, say, with an Amazon to make deliveries possible to people in Indonesia while making a margin on each transaction gives Indonesia Tel, all the combined entity, a slice of that e-commerce pie, which currently is very large. So even a small slice of that pie, which can be grown over time, given that the Indonesian population is growing and the economy has say $4,000 GDP per capita, which is significantly reasonable compared to other emerging markets. There's great opportunity in such partnerships.
And just to add on to the why they would want to do that, we did a couple map overlays comparing the assets and where they are physically located, and they were much different than ours when you compare across the islands as compared to the other companies that actually tend to be very similar to us in our offerings.
I appreciate it. We have time for one final question.
Sure, thank you. So we had one question. Usually when a merger happens, the acquiring company stock price goes down. Currently, Indonesia Tel has only, their net income is at 6%. So where will the funding for, funding this merger come from? And why should Trinet take the offer from Indonesia?
So first of all, a merger, not an acquisition. And mergers don't always have to be by cash. You can do shared transactions where there's no cash involved. So that negates the issue of cash. However, because you've mentioned the issue of cash, part of the strategy is the sale and lease back of assets. So if you look at the financials, beyond assets that are already leased, you see that we can unlock about $536 million by selling and leasing an asset back, and then leveraging on the omnibus law, there'll be enough cash flow in the business to pursue other activities like growing the 5G operations. So it doesn't have to be cash transaction, and it is a merger, not an acquisition. So no need to exchange cash. And in terms of share price, the potential value to be created in the long term significantly supersedes any decline that may come in the short term. So even if there's a marginal drop in share price today, the long-term benefits of scaling into the wider Asian market presents great opportunities. And even moving into e-commerce alone, the benefits from that could clean out any potential falls that occur today.
All right, appreciate the response and thanks for the presentation.
Thank you very much.
So with that, we've now concluded the case competition. Another round of applause for all of our presenters. And then also we'd like to express our appreciation to Corning, who sponsored the case competition and the overall conference. So thank you very much.